If you are not purchasing a house with cash, you're probably curious about what your financing options are. Today, I have Molly Zimmerman from Bell Bank Mortgage here to talk to us about the different loan types, breaking down the difference between, what's an FHA versus conventional, etc. And just like every Wednesday, I will bring you the Wright County real estate market update so that you are aware of what's happening in our real estate market. I'm Erica Carlson. I'm with Bricks Real Estate. I help people sell, real estate all over the Twin Cities. I specialize in the Western Metro. If you have any questions during this video that I'm making today, feel free to reach out to the link provided. Choose the first option and pick a time that works best for you. We can talk about buying, selling, whatever's on your mind. If you learn anything new today, I'd love for you to join me on my YouTube channel, my professional Facebook and Instagram pages. Please join along by subscribing. So without further ado, let's look at this week's data, and then we will bring Molly Zimmerman on towards the end. You can see our market meter has come down a point. We were at 7. I think even last week we were reporting 7, and we've dropped to a 6.05. As you can see, the little star is, just bordering on a balanced market. We're not a severe seller's market by any means. And this is the entire Twin Cities metro. I'm going to be honest, I don't know exactly how they're defining that. So it's a few counties. I don't know if it's all 13 counties or not. Inventory's up over last year, which still probably doesn't mean much to you, even if you don't have that ability to compare and contrast, because you can't always feel these changes. Even as someone who looks at a lot of houses, I can't necessarily feel that difference. Where we feel it is in offers. How competitive is it? And it depends on your price point. So you're definitely going to want to work with your preferred real estate agent when you go out and house shop, so you're prepared for how competitive it will be. As a general rule of thumb, houses under $350, single family houses, will be very competitive no matter what condition they're in. And then the nuances go from there, whether it's a townhouse or a condo or what part of town. You definitely work with your agent on that to understand your market that you're in. Average days in market, we're still at 22, so that hasn't changed much over the last couple of weeks. And the interest rate has been hovering around 7.125. That's a 30-year fix, no base points, no particular lender. That number has been real volatile lately. It did drop into the 6s, but when I looked at it, it still looked like it was the high 6s. So it would have been a little premature to celebrate that and think that it hasn't stuck. So, will this summer be a summer of slightly lower interest rates? I guess. I don't know. I'm not a big fan of predicting things. Let's move over to Wright County. Reporting 500 total properties to purchase in the entire county, and only 441 of those does not have any sort of contingency attached to it. So that's the number I'm always a little bit more interested in. However, the reason I report it this way is because ones that are contingent can fall out of contract and come back available. Some of these just might be temporarily not available and they'll come back on the market. That's actually like a thing we can market as no contingency. It's called TNAS. I've talked about it before. Anyway, the overall, the inventory moved up over last week, but then when we just go back to the week before, it's, pretty similar. So these changes, these last 3 weeks, I would say, they're up over the weeks before that. A lot of people don't realize when they're listing their house that the competition goes up because people wait until it's green outside before they think it's a good time to sell a house. And the problem is maybe a lot of other people are thinking that. So the inventory is a little bit higher than it's been in a really long time. So if you are a home shopper, this is good news for you. You have more choice. It looks like we have to get almost back to December before we've had this much selection, and you can see it's even better in December, November. And that makes sense. This lines up with what I generally tell people is if you're a home shopper and you can avoid the spring market, good for you, because we know prices are going to be higher and we know competition is going to be higher. The downside is, as a seller, it doesn't mean you can't sell your house. It just means even more competition in terms of other properties. So not the end of the world by any means. 278 is pending.
I mean, it's only up a hair over last week. Again, the trend is that this is the highest it's been in a very, very long time. Let's try to find here where, there we go. September of last year was the last time it was closest to these pending numbers. So again, doesn't tell us too much, anything that might particularly jump out at you. It means houses are selling. It's a good thing. Closings, they came down over a little bit last week. These numbers bounce up and down, but you can see overall, when I go back through the last couple of weeks, this is the highest. Actually, last week was the highest number, but this is on the high side. Let's talk about days on market first. So we're at 26.4 for the average and 20 for median. This is the last. These are just based on the pending data. I only go back a week to pull this. So these are actually the houses they're selling. I remove all the ones that are not selling. This is just Wright County. That really lines up with what we saw in the Twin Cities metro. It's about the same. And then, as I tell you guys, this is my favorite data because it gives sellers a good idea of what to expect, and it gives buyers a good idea of the competition. When we just focus on Wright County, 2.7 showings per week per listing in the 250 to 500K range. This number is not substantially different than what we've been seeing as of late. Now, you have to skip over the Hennepin County data. 2s and 3s, you can see when we hit 4s like we did on April 24th, that is unusual for our county. That was a very hot week. Of course, this week, that was a full anomaly that we almost never see 7.8 in our county. We just don't have that population to support it. So if you're a seller, 2 to 3 showings a week is average. If you first come on the market, we don't expect it to be that number. It would be substantially higher. You have to remember this is averaging things out. And then 5.6 for Hennepin. Again, this is pretty normal for them. A little on the lower side because they kind of range in the 5s and the 6s. They definitely can get higher than that. We've seen much higher than that, but you can even see here in the winter, Hennepin drops down to be about the same as Wright County. So no surprise there. There's some competition. Multiple offers are still normal. Even when you're trying to comprehend these numbers and what they mean to you as a home shopper or a home seller, it means houses, like when you look at this data, are still selling relatively quickly. You shouldn't expect it to take a super long time to sell a house unless it was maybe very depending on the price point. If you don't price it right, if you have, I'm begging people to stop using the cell phone to take pictures. It just doesn't give you a great idea of what's happening. So it kind of depends on the marketing too it does. It's statistically proven. I don't mean that. So if you have any questions for me, feel free to reach out about this.
Been in the mortgage industry for a little more than 17 years, and I work out of Maple Grove, and I work with a lot of buyers out of the Wright County area. So I appreciate coming and I guess talking to you a little bit today, I think, about loan type comparisons.
Yeah, exactly. I think a lot of people, what I've learned is and I just told you this a moment ago, is that I'll get like somebody new and then we're just talking on the phone or we're meeting and I'll say, well, what kind of loan did you get approved for? And it's just kind of a deer in headlights moment. And it's an important answer. You and I both know that, if you're a certain type of loan, it's government backed. We can't do any chipping paint. We can't do a major rehab. And so this question is really important to me as a real estate agent. But I'll let you get started. What's the most common one?
Yeah. So, I guess when I'm talking to buyers about loan types, I like to think of, there's pretty much, in my mind, like 2 main umbrellas of financing is what I call it. So you've got, on one hand, your conventional financing, which you might hear terms like Fannie Mae, Freddie Mac. Those are agencies that back a lot of conventional loans that are done. I would say the vast majority of them. And typically, I would say a conventional loan is pretty good for buyers who do have good credit. It tends to be geared towards higher credit borrowers. Loan down payments, as little as 3 to 5% down for first-time home buyers, which is awesome. And there's a lot of different assistance that we could potentially add to it to maybe help bridge that down payment. But one thing that I think is really cool about the conventional loan umbrella. If you have good credit, you're a first-time home buyer, and your income falls below a certain percentage of the area median income, you might actually get some discounted rate pricing and possibly even private mortgage insurance. So it helps it be a more affordable option for those with good credit to get into a good long-term loan. I'm not sure if you want to add anything else to that whole conventional umbrella. But
I think that's the one where it's the most common, and it's the one like people go, I don't know, because like maybe the loan officer didn't say you're conventional, and so they'll just kind of be like the normal one. It's like, it's normal. They're all normal. But that's what I think. Sorry.
Yeah, I was gonna say the cool thing is you've got depending on both umbrellas of financing, you can pair assistance with it. So I think sometimes that gets confusing too.
Yes.
But conventional is known for, you think about private mortgage insurance. It drops off when you amortize to 78%.
Yeah.
Or if you put 20% down up front, you don't pay it. The private mortgage insurance premiums are tiered. So every 5% down that you put as far as a down payment, what you're paying for monthly PMI gets better. Okay. So there's just a couple different things there. But, even if you're looking at doing like a construction loan or a rehab loan, those are typically going to fall also like under a conventional type of a product. So just a little bit there. And I think on the other hand, you've got your government backed, which you had mentioned. There tends to be a little bit of, I think, feeling in the industry that if you're in a government-backed loan, like an FHA loan, you might have maybe not as great of credit.
Right.
So that product is a little bit more forgiving. So if you've had a credit bumps, I mean, the awesome thing is you can qualify for an FHA loan typically quicker than a conventional. And you're not going to get hit in your rate pricing for maybe having a little bit of a lower credit score like you would on a conventional product. But there can definitely be nuances too when you're dealing with government-backed loans. Like Erica said, chipping and peeling paint is an issue. The appraiser might call out work orders within the appraisal. So, I mean, there's certain houses that may not be able to go with a government-type product.
Yeah, and to just give people like a real-world example is when I get that initial phone call, I want to see 123 Banana Street, and I pull it up and there's no flooring in the kitchen. The bathroom's being like fully gutted. Maybe you can just like see some water leakage or some things. It's not about the stuff in the house. It's the condition I'm seeing the house is in. And so I have to jump to that question with people rather quickly, even though they might find it a little invasive for somebody who's a stranger. The reason why is, why should we go look at that house if you've got a government-backed loan, which, to be crystal clear to everybody listening, that's VA, USDA, or FHA. Yep, I think I covered all the three main ones. And so I need to know this, because why would I, not for my time, but for your time? What a waste of time to go look at a house that really needs a lot of work conditionally. This is never going to we're not going to get through the appraisal process. The seller is selling it in that condition for a reason. So if you do decide to go that route, and it doesn't matter to us which way you go, it makes whatever sense for you, but we need to ask the right questions. And a part of the houses that are kind of on the edge, I really want to know that if you're going with an FHA option and we're house hunting together, I need to say, yeah, we might have an issue there. And side note, we can have an issue with conventional too. Not very long ago, we got a couple of work orders on a house that just needed a fair number of projects, and the appraiser said, I need, a structural kind of an engineer to come out here and double check that the roof isn't going to cave in, which is obviously a huge deal. And the basement, we wanted the foundation checked, and I'd never seen that on a conventional loan. But, appraisers have things they worry about too, and they don't want to just stamp an approval and say this house is safe and okay and we're going to give you money, when literally the next snowfall, that roof could fall in. Now, the buyer knew that. I guess just to finish my little story, they understood, they had an inspection. But if I'm being quite honest, I don't think we expected the appraiser to call it out. The buyer was comfortable with the condition. And that's what I try to get people to understand, is it might not be about you. You may be okay remodeling, fixing, doing. We may never be able to get you money. With 123 Banana Street, as I like to say, is not going to be your house because you're not a cash buyer.
So, right.
Yeah.
Yeah. And I mean, I think that covered a lot of good stuff right there. But yeah, with the government-backed loans, I think their big concern is they want the safety and hazardous issues.
Yeah.
That's kind of their push on the appraisal. So I mean, the appraiser's kind of taken a couple additional steps, but we still do see things get called out on a conventional appraisal at times. It just depends. I mean, I think if it's a glaring, obvious issue and that the appraiser is concerned about, they're going to call it out. But I feel like on the government-backed loans, they're more out like looking for things. Right, so they're making sure they are, up to a certain code, I guess. But that would be what they're looking for.
The nice thing about where we live is we are in an area that if you're interested in a USDA loan, like we do live on the border where it begins. If you're willing to go a little more west or a little more north, so the Wright County area would be. A majority of it is USDA. If you think about the west side of the metro, it starts somewhere like around Rockford Township. And so if you're interested in that type of loan package, they're not as common, but there's tons of houses that, you and I personally live very close to this border, and somebody could consider if they needed that. And this would be a great option for someone who might not qualify for the down payment assistance or like city grant money, that like maybe they're shopping in an area where there is no city grant money. So just food for thought. This is why working with a loan officer early in the process is so instrumental, because you want to buy a rehab, but you're qualified for an FHA loan. We already have a problem. We need to know what we're shopping for. We need to work these things out before we start looking at houses, in my opinion.
And sometimes certain loan products, you actually need more time to process them. So it becomes a little bit more challenging when you find a property that you love. Let's say it's Saturday and you want to get answers, but maybe me as a lender, I might have to run something by an underwriter on a certain loan program, and then I need more time. So, I mean, the more proactive you can be, working with your lender in advance, I think the better that we can serve you, and the better you're going to just have an advantage when you're putting offers in.
Exactly. I agree. Yeah. You just I think 6 months to a year out is not too early. You don't want to be calling people, 30 days from your lease running out, or you're, needing to get a house sold. We need to work through all these nuances with you. And listen, the worst case scenario is we say, oh, we started too early. Let's start this process in a couple months. I would much rather people start it too early than too late. Because it always feels like, we're pulling the rug under people. Like, no, you can't accomplish your goals. Well, it is.
Well, and sometimes starting early allows us time to, let's just say that you're on the cusp of a higher credit score. Like, what can we do to get to that next level? That in turn helps you get into a better loan, better rate pricing.
That's a great point.
I think a huge benefit to actually start sooner than you think. Because you're going to have way more knowledge when you're ready to start shopping. Absolutely.
I know we probably could talk about this a lot longer. I'll kind of wrap it up just so we're not being long-winded. I'm going to do a little plug. This is for free. You can download it. I will not know you're downloading it from my website. I've got a seller and a buyer guide. I didn't write it, to be fully honest. It comes from my brokerage, but we do have full chapters on what loan is best for you, what the different types of loan types are. So if you're feeling a little shy about talking to a person, no one will know you're downloading this guide, and you can get this information at no cost, no strings attached. So thank you so much, Molly, for joining me today.
Thank you.
Have a great. We always appreciate Molly being on, and I hope you learned something new and that you will subscribe and join us. I always appreciate those of you who come back week after week, and those of you that are new, welcome. Have a fantastic Wednesday.